Hi everyone, welcome to Buy Now Sell Now, the weekend edition. This is the show where we answer all of your viewer queries as well as address the stocks in each of your individual portfolios. I'm Avinnash Kapasi and let's kickstart the show by telling you what exactly we have lined up for you in this edition of Buy Now Sell Now weekend. First up, we'll be discussing the stocks ITC as well as Tata Power, and later on the show we'll be addressing the portfolios that belong to Raja Sankar as well as G. Krishna. So without any further ado, let's bring on board our experts then who are going to join us and help our viewers out with their queries as well as give us their top market observations. Avinnash Gorakssakar joins us now on the fundamentals, and we also have Ashish Kyal on the technicals. Thanks so much, gentlemen, for joining us on Buy Now Sell Now weekend. Let's bring on board our very first query for today, and it's coming in from Ajay Kumar Dua from New Delhi. He says he has bought 60 shares of ITC, which he's purchased at about 291 rupees per share. He has a time horizon of 3 years and he wants to know if he must hold or average out. Well, the stock's certainly trading below his cost price, and do remember, it's a stock that has seen quite choppy times, especially in fact prior to GST, where the possibility of there being no merit tax is something that has aided a rally, but subsequently post GST, that rally has more or less fizzled out. It stayed below the 300 rupee mark, and there you have it. Certain bull cases as to what perhaps could be prominent when it comes to ITC is that it is moving away from the cigarettes business. It's trying to diversify into other FMCG categories and products. And it's also in fact looking at various other business options as well, including a multi-specialty hospital. So let's understand the fundamentals first from Mr. Gorakssakar. And Avinnash, what exactly would you advise our investor to do?
No, I think looking at the kind of business ITC runs, and I think looking at the frontline, quality of the stock, I think, if the investor has a long-term horizon of at least 2 years, he should hold on. I think the GST impact has clearly worn out, but the positive part about ITC is that volume growth has obviously started moving in. And our sense is that both FY18 and FY19 should see a good positive volume growth for the cigarette business. And as you rightly pointed out, they are making efforts to de-risk the cigarette business by moving into the food business. So I would believe that if the investor has a slightly longer term horizon of say 12 to 18 months, he should hold on. He could definitely get a good risk reward.
Yeah, that's something that most investors were talking about. There were concerns actually in relation to what the volume growth could be for the fiscal ended 18, especially post GST, and additionally there is that stake sale overhang as well that caused the stock to in fact drop below the 300 rupee mark post the GST run up. Ashish, on the technicals, how does ITC look? At about 291 is where he's purchased it and he's making a loss.
See, the overall trend for ITC over short term is negative, but nevertheless, bigger picture, ITC in 2015 and 2016 was sitting in a range, and the range was coming around. So I think hold on to the stock. Time horizon is for 3 years, so I think when the markets are getting dicey, defensive is going to start playing a major role. And ITC is one such stock that has a very strong fundamental and can start doing better from here on. So hold on, he can also average out at current levels and use a stop loss of 250, because 250 has been the resistance before, should now act as a support, and the first target that he can look forward to is 320 on the upside.
All right, so I think it's a consensus hold call coming in from both of our experts when it comes to ITC. That's of course the technical charts and technical levels according to Ashish that you must watch out for. And Ajay has one more question. This time it's coming in on Tata Power. He says he has bought about 50 shares of Tata Power at 91 rupees per share. Again, his time horizon remains the same for 3 years. He wants to know if he must hold or sell. A fairly small investment made in Tata Power, but it's a stock that has seen quite a tumultuous ride this year, especially post the CERC order coming in relation to the compensatory tariffs for the Mundra power plant, for Tata Power, for Adani Power, post which of course the stock rather has seen quite a difficult journey, and even the sector exactly does not paint the prettiest picture. Avinnash, over to you first. What exactly are in store for the fundamentals of this stock?
No, I think if you look at the power generation business, I think Tata Power clearly has definitely some issues relating to the compensated tariff, and I would believe that if the investor can wait for the couple of years, then I think these things could possibly get resolved. In the near term, earnings may appear to be little volatile, The good part is that the Tatas are now planning to actually sell non-core assets of Tata Power. Tata Sons might possibly buy them out. So, the debt on the balance sheet could get significantly reduced, at least to the extent of about 4,500-5,000 crores. So, overall I think it is a good bet if one were to look at it from a longer term point of view, and I think the investor has the kind of time horizon. So, he should hold on. I would believe that in the longer term, Tata Power can definitely give him a good upside.
Okay, so don't be too worried about the loss you're making. You can stay put at least at the current juncture, and especially since you have a longer term time horizon. Ashish, on the technicals, how does the chart pattern look for Tata Power, especially if you look at it from a longer term time horizon? It's not been really the most ideal chart pattern.
I do agree to that, but if you look at it in 2016, Tata Power made a low somewhere around 55 levels. And from there, the stock touched the high of 90 in early 2017. So if you look, there has been a very decent run up on the upside. And now what we are seeing is probably a retracement of that run up. So that looks very healthy to me. The overall trend has been bullish. The stock has been forming higher low from the medium to long term perspective as well. So that looks decent enough. So he can hold on to the stock right now. But I would suggest use an important stop loss of 75 level, because that is a very important support from where it has bounced back on previous occasions. Use that as a very important stop loss. And on upside, if we get the level of 90, book some partial profits there. So 90 is a decent level where he can look forward to book some profits and trail the remaining holdings that he might have.
Okay, so 90 rupees is a target that Ashish is advising you may watch out for when it comes to Tata Power. In fact, once it reaches that level, you may actually partially exit your holding of about 50 odd shares in the investment. Ajay, I hope we've been able to answer your queries on both ITC as well as Tata Power. We will do one thing, we'll slip into a short break, but when we come back, we'll be answering your portfolio segments. So don't go anywhere. Welcome back. You're tuned with us on Buy Now Sell Now Weekend, and it's time to get in your viewer portfolios. Today we have not one but two investors who have sent in their portfolios. First up is Raja Sankar. Let's tell you a bit about him. He's 42 years of age. He's based in Kanyakumari and he has a long-term time horizon of 5 years. His portfolio comprises of about 6 stocks, 2 of them being from the auto ancillary space. Let's run you through what exactly are the contents of his portfolio. First up, 100 shares of Bharat Forge, which he's purchased at about 670 rupees, and that investment has in fact doubled for him. Motherson Sumi purchased at 280 and SBI purchased at about 242 rupees. There's also 1000 shares of Noida Toll Bridge purchased at about 22 rupees. 100 shares of Lupin purchased at 442 rupees, 1442 rupees, pardon me, which of course is a bit of a pain point for him. And lastly, Ramco Cements, making good money on those 40 shares that he owns in the company. 492 is where he's purchased it at. So Avinnash, without any further ado, let's start off with the first 3 stocks, Bharat Forge, Motherson Sumi and SBI. What would you advise him to do?
No, I think Bharat Forge, I think he should hold on. He's made a decent profit and the company has even given a 1:2 bonus. So my sense is I think he should hold on and take the bonus. We expect that on a X bonus basis the stock should trade at around 800 rupees plus. So here definitely prospects are good. He should hold on. The second stock, Motherson Sumi, also is a very prominent auto component player. We believe that over the next 12-18 months, looking at the kind of traction the company has posted both in the domestic and European markets, he could expect a target price of around 425. And as far as SBI is concerned, I think he should exit out of this PSU bank. We believe that in the coming 2 to 3 quarters, the headline number for the profitability number of SBI could come under pressure, and we believe that Federal Bank could be a better private sector bank to invest at the current levels. He could expect a target price of around 150 here over the next 12 to 15 months.
Okay, there you have it. That's the call coming in on the first 3 stocks in his portfolio. It's mostly a hold, just an exit on SBI and instead buy Federal Bank. And the next 3 stocks, Noida Toll Bridge purchased at about 22 rupees. He's losing some money over there, as is he in Lupin, which he's purchased at 1400 rupees. And Ramco Cements, 492 rupees is the only stock in these 3 stocks that he's making money on. Avinnash, your call?
Yeah, I think as far as Noida Toll Bridge is concerned, I think he should exit out of this counter, because we believe, this business model, despite being very good, there have been lot of corporate governance issues, and therefore I think a switch would be better. He could look at a stock called Future Consumer, which is priced around 60 odd rupees. If he can hold on for the next 12-15 months, we are looking at a target price of around 80 to 82 here. As far as Lupin is concerned, I would suggest him that, within the pharma basket, this is a frontline player. He could actually average even at the current levels, take a 12 to 18 month horizon, and probably around 18 odd months he could look at a target price of around 1650. And finally, Ramco Cements, which is largely south based, I think he can continue to hold on. His entry price is also pretty good, and he could look at a target price of around 900 here.
Okay, so replace the corporate governance issue riddled Noida toll with perhaps a Future Consumer, and optimistic on Lupin and Ramco Cements. Let's bring on board our next portfolio for today. Then it's coming in from Mr. Krishna. He is also 42 years, or rather he's 37 years of age. He is an investor and he has a time horizon of 3 years. The stocks in his portfolio, well, a lot of mid and small cap names with the exception of a Sun Pharma and an Infosys. But to run you through the remaining, there is Oriental Carbon and Chemical, which he's purchased 60 shares of at 951 rupees. Tata Investment purchased at 271 rupees. Both of these investments, in fact, he's making some very good money. And there's Precall, which he's purchased at 105 rupees. And then, like I flagged off, Infosys purchased at 1189 rupees. There's also Indocount, which he's purchased 200 shares of at a price point of 171. And lastly, Sun Pharma, 35 shares purchased at 813. That stock as well is where he's losing some money. So Avinnash, let's start off with the first three: Oriental Carbon, Tata Investment and Precall. What would you advise him to do?
No, I think as far as Oriental Carbon and Tata Investment Corporation is concerned, I think he can hold on to both these companies. In fact, in Oriental Carbon, we believe that if he can hold on for the next 12-15 months, he could look at a target price of 1450. For Tata Investment Corporation, looking at the restructuring in the Tata Group, I think this is one of those holding companies which holds all the Tata Group companies. His buying price is also extremely low. He should continue to hold on. He could look at a target price of around 1100 here. And Precall, which operates in the auto component space, here also I think, despite being a slightly a high price share for him, we believe that medium to long term prospects are good. So he could look at a target price of around 120 here. He should hold on.
So all three are a hold from Avinash's point of view. So the next three stocks: Infosys purchased at about 1189. He's losing some money over there, almost about, in fact, 300 rupees is what he's losing. Indocount as well is a money loser for him, and so is Sun Pharma purchased at 813. Avinash, your call.
See, I think as far as Infosys is concerned, I think the investor should actually give his shares in the buyback offer which company has made. The buyback offer is around 1150, and I think most probably the retail acceptance ratio is going to be quite high. Whichever shares get left out, I think he should sell out in the secondary market, because we don't think any big upside could come in even from the current levels. The second stock is Indocount. Indocount is a leading player in the home textile market space. We believe that with the rupee depreciating and with the US markets again turning around, the company should benefit. So look at it a slightly longer term horizon. He can average even at the current level. Look at a target price of 190. And finally, Sun Pharma is within the pharma space. I think we are not going to see any major re-rating happening here. So a switch to Aurobindo Pharma would be better. I would suggest him to buy Aurobindo Pharma with a target price of 900.
Okay, there you have it, all the chops and changes that Avinash is advising on your portfolios. But please do remember, this over here is only a model portfolio. We do recommend you consult your individual investment advisor before taking any investment decisions. Let's take a quick break right here on BNSN Weekend, but come back for lots more ideas on the equity markets. Welcome back. You're tuned with us right here on Buy Now, Sell Now Weekend, and let's focus in on the markets. For the most part of the week, it was quite quiet really, but it was on Friday's session where we saw maximum carnage. 1.6% gone for the Nifty. That's about 160 points is what we lost just in Friday's session. In fact, it was the worst day for the market since I think in the entire year of 2017, and accompanying that was also the kind of plunge we saw in the rupee, which went below the 65 rupee level. And there was also metals, realty. Those were some of the big losers in the trading session and the trading sessions rather that went by in the week. And there you have it, the weekly charts of the week gone by. It has been carnage really across sectors, and most of it of course came in on Friday's sessions, perhaps accompanying the sort of decline that we saw in the Asian indices and the Asian peers, and everything having to do with North Korea and the to and fro between North Korea as well as the US administration. So let's understand, what exactly must you do in the week that's coming forward when it comes to the markets? Where exactly should you place your bets on with our experts? First up to you, Ashish. As I was saying, we once again slipped below the 10,000 mark, complete carnage mode on for the markets. How exactly should traders position themselves on the markets?
Hi, see, the overall trend that we have seen on the Friday session has been definitely bearish. It has been a very severe sell-off of nearly around 160 points, and it's not very often that we see a selling of this magnitude. And one more very important thing that you have to note is that this has happened on the back of extreme positive sentiments, the liquidity-driven rally that we have been seeing all the while. And there has been absolutely no very strong event that has taken place which warrants such kind of a sell-off. So this was purely based on probably fresh short position build-up, as well as it is also accompanied by some profit booking in the stocks in which the investors were making money. So it's accompanied by both the things. Next very important observation that you can do across the market is, if you look at Nifty, it did touch 10,180 levels. I think that is the lifetime high. But Bank Nifty did not break the level of 2nd of August. So there is a classical negative divergence that we are seeing between two different indices. That's a very important observation that one should keep in mind. The next is on the daily chart of Nifty. RSI is showing a negative divergence again, which means that prices made new high, but the momentum was less. It was with a slower momentum the new highs was made, and that is why what we are seeing right now is a very classical outcome of what we expect after a negative divergence on RSI, after a negative divergence between two different indices. So this is a very, very important thing. Also, the rupee is depreciating sharply. It's not only USD INR. If you look at it, has been depreciating against GBP, and it has been depreciating against Euro. So that is what is concerning me. So across the space, if you look at it, there have been some subtle observations that one can make. In the coming week, if you want to trade for on Nifty, I think the best way to do is sell on rallies. Any pullback from here towards the level of 10,040, I think is the ideal opportunity. I know that's a 100 points up move, but given the sharp sell off, volatility can be very high. So anything you get near 10,000 to 10,040, use that as a selling opportunity. We might be heading towards below 9,900 in the coming week. So sell on rallies is going to be the ideal opportunity on the index.
Sell on rally. So Ashish is clearly a bit circumspect when it comes to how the Nifty could move in the week that's going to come. Avinnash, on the flip side, we do have the very strong liquidity in the system. DIs are constantly pumping money in, and that's something that's sort of a support for the markets. How exactly, what exactly rather are you looking at when it comes to the markets?
No, I think, Avinna, I think clearly the markets would be little volatile, considering that in the coming week we have the FNO expiry, and most importantly with the rupee depreciating, I think that is one factor which the markets definitely don't like. The dollar index is down. So I would believe that now, with reports suggesting that the government is going to come out with some fiscal package, I think the markets are clearly awaiting what could be the size of the package and how this financing for this package would happen, because obviously the government does not have many resources available, and how the money would come in would be a key factor to watch. And most importantly, to what extent the fiscal deficit targets in the coming year budget are going to be re-altered. These are macro factors which now the markets would be clearly observing. So overall, I think it's going to actually be these kind of events which will now drive the markets. But yes, I think in the near term we could see levels of 9,900. I think 10,000 is now going to be a stiff resistance.
And that's something that both of our experts have actually been talking about. 10,000 may be a tough nut to crack now. Well, we'll do one thing. We'll talk about some stocks then that will help you in this kind of a volatile market. First up, Ashish, help our viewers out with what exactly are your top trading recommendations for those traders who have a fairly short-term time horizon.
Sure. First stock on the buy side is going to be HCL Technology. The reason for picking up this stock is sheer outperformance. So if you look at it, when the majority of the markets have been cracking, there has been sell-off across the board. This stock has strongly outperformed. And I think IT has been overdone over the period of the past 2 years. There has been severe cyclical down move that we have seen both in IT and the pharma sector. And it is now time that these sectors might start outperforming. So IT is something that one should look forward to for probably creating long positions from investments as well. And HCL Technology has been an outperformer. So there is a possibility we can start seeing the stock moving towards the level of 940 on the upside. So the trading strategy on HCL Tech can be one can create long positions here. Keep a stop loss of 850 on the downside because that is the pivot low from where the price reversed. And then we can expect a move towards the level of 940 on the upside. The next call is on the Century Textile. This is a short-term call, and on the short side, because what we have seen is there has been a serious sell-off in the mid-cap and the small-cap space. And also one very important observation is if you look at price to earning ratio at the index level, those have been extremely expensive. And Nifty also crossed about the PE of 26. So those indicate an extreme expensive levels. And I think the stocks that have been moving up should now start underperforming. Something like Century Textile from the mid cap space can underperform. It has given us short term HNS pattern also, which is a distribution pattern, and broke below the neckline in the previous session. So we can now expect it to move towards the target level of 1190. So short positions can be created here. Use a stop loss of 1290 and expect a target of 1190 on downside.
Okay, there you have it. Those are some technical calls coming in from Ashish for those investors or rather traders who have a fairly short-term time horizon. But for those investors who want to keep their money in equity markets for the long haul, Avinnash, tell us what are the stocks that you have picked out?
Yeah, I think Mubina, I have selected two stocks which actually have an export theme, and I think the first stock is an auto component company by the name of Krishna Forgings. Now, this is India's second largest forging company after Bharat Forge. They have a installed capacity of 1.5 lakh tons, and out of this, quite noteworthy is almost 80,000 is the hydraulic press capacity, where clients like Dana and Meritor are catered, especially for the Class 8 truck production. The company is a very large vendor to both Tata Motors as well as Ashok Leyland, and actually operates in the heavy forging space. In fact, last year was a slightly disappointing year for them. They reported a top line of almost 800 crores plus and a EBITDA of 169 crores. The bottom line was quite significantly down at around 20 odd crores. Now, this was largely because of the fact that the CV cycle was impacted by the demonetization, and the Class 8 trucks in the US markets was also down on a year on year basis by about 36%. But coming to the year FY18, things have started looking up. We have seen that the Class 8 trucks production has actually moved up by almost 42%, and this traction is definitely going to help Krishna Forging, because a large percentage of their output actually goes to Class 8 trucks which are made by Dana and Meritor. Most importantly, the company has incurred a capex of almost 700 odd crores in the last 3 years. So, the capex cycle is almost complete, and we believe that now the operating leverage will kick in the business, and that would obviously help the company operate at a high capacity utilization and actually drive both EBITDA as well as top line. We expect that in the coming year the company should post an earnings of around 16 odd rupees, which could go up to almost 40 rupees by 20. So, looking at the medium to long term prospects, this price looks very attractive. We have a buy on the stock with a 12 to 15 month horizon of around 700 here. The second stock is a mid cap gem and jewelry company named Lipsa Gems and Jewelry. Now, this is a Bombay based jewelry company which actually exports to the US, Israel, Belgium markets, and quite frankly in the last 3 years they have consistently maintained their top line and profitability growth. The company posted a top line of almost 275 crores and an EBITDA of 27 crores and a bottom line of 21 crores for FY17. In fact, the first quarter numbers have been very strong. The company has posted a top line of almost 84 crores and with a bottom line of almost 7 crores, and the management is pretty confident that this traction is going to be continued at least in the coming 2 to 3 quarters. Most importantly, unlike most of the other players like TBZ, which has got a large debt on the balance sheet, Lipsa has a very low leverage. In fact, the company plans to repay its entire debt over the next 12 to 15 months, and we believe that most of the earnings growth and the earnings surprise for the company could come in basically from this debt reduction. And as far as EPS growth is concerned, we expect a 20 to 30% kind of growth. So, overall earnings numbers look very strong. We expect a bottom line of around 30 odd crores for FY18, and around FY19 this number could easily exceed about 40 crores. So, overall I think on a price earning basis as well as on a market cap to revenue basis, the stock looks extremely undervalued. We have a target price of around 69 here.
Okay, so there's RK Forging and there's also, in fact, Lipsa Gems and Jewelry. So those are the stocks on a fundamental basis that you can watch out for. On that note, thank you, gentlemen, for joining us on Buy Now, Sell Now Weekend and helping our viewers out with their queries as well as giving us your top picks. And thank you, viewers, for tuning in and watching the show. From me and the entire team, it's a goodbye. Have a lovely weekend.